Hi everyone, I quickly want to say happy holidays, Merry Christmas, and tomorrow on Monday I'm going to do a Christmas live stream. So make sure you tune in. I don't yet know how late it will be, but you'll get the notification on YouTube. That being said, let's jump in the analysis where we go through the bullish and the bearish Elliott Wave scenarios on Bitcoin, starting with this flat scenario over here where wave B is not yet finished. In this scenario, we're still looking for a higher B to the upside before then an impulsive C to the downside, where for wave C, we're looking for a 5-wave structure. And in this wave B, we are looking for a double zigzag structure and then a W over here, zigzag already finished, wave X, and then eventually a wave Y to the upside. Now the target area for B and therefore also the blue wave Y will depend on how deep wave X will move towards the downside. Common target area for wave X is between the 0.382 and the golden pocket taken from the low to the high of W, with the invalidation kind of for a double zigzag being the 0.7 over here. The 0.236 is a less common target for a wave X. However, if we would pull a target area for wave Y, which is the 1 to the 1.236 from the low to the high of W to the low over here, we can see that the target area for wave Y is right about the 1.618 target for wave B. Now the 1.618 target for wave B is a little less common. It's sitting at 47k, but it is interesting confluence, and also because of a weekly naked point of control that we have at that level as well, 47,300, right around the 1.618 and inside that wave Y target area. Of course, if price is going to move to the downside first here, reaching the common target area for a wave X, the target area for your wave Y will move to the downside as well, and you can see it then gets closer to the potential most common wave B target area, which is over here between the 1.236 and the 1.38, which is between 45.4k and 46k, which is in confluence with the golden target box here that we have been looking for a very long time now, 45.2 to 46k. If we go to the second scenario, we are also looking for the highs to be taken. However, we don't expect price to go all the way up there, right? We are looking here for a smaller flat in wave Y. We then have an ABC flat in wave W over here, then X being likely a flat as well, and an ABC, 3-wave A, correction in B, 1, 2, 3, 4, 5 in C ended. And then we're looking for a flat structure over here in an ABC, where after the highs are taken, preferably the more local highs, may be touching the golden target box as well, as of course it's very close, just above that high. We could then reject to the downside in a smaller wave C. This wave C, of course, also has to be a 5-wave structure to the downside, where for a wave Y, the common target area is between the 0.618 and the 1.236, which is between 41.5k and 38.7k. Most commonly, the target area is the 1.236 to the 1 here, with the 1 sitting at 39.8k. Now in this scenario, it would be no problem for wave A to be a little bit lower and take the lows over here, and that's the same as in this wave X scenario here. Moving to the downside to take the lows would be no problem. It doesn't invalidate the scenario, but in both cases, we would be looking for a move to the upside before then a correction. The only scenario where you do not expect a move towards the upside before then a move down is this ABC flat scenario here, but for me this has the lowest probabilities. We have a wave A, wave B, and we're looking for a wave C and then a regular flat. In this scenario, wave B internally is also an ABC, and that really impacts the probabilities for this scenario negatively. In here, we then have a 3-wave A, B, 1, 2, 3, 4, 5, C, and having a flat structure inside wave B in a bigger flat structure really lowers the probabilities for the bigger flat structure, because this is actually not really something that you like to see. Now, in this scenario, the invalidation is, of course, if price would move up and take the high, and more locally, we then have to look for potential 1-2s, right? Because we're looking for an impulse to the downside, where preferably this is your 1-2 and then a move down, or a 1-2, 1-2, and you want to see strong continuation to the downside, preferably supported by some solid bearish CVD divergences. But if we go to the lower time frame here, and I open the CVD folder, then you can see, yeah, we have a little bit of bearish CVD divergences here, but what's interesting is we don't have any bearish CVD divergences with, let's say, this high over here, lower high on price, lower high on price. We don't have a higher high on the CVD, also not between this one and this one, lower highs on price, but not a higher high on the CVD, and that is what you see over here. So you can see that as price has been moving towards the downside, CVD is also moving towards the downside. And yes, locally, we do have a little bit of bearish CVDs over here with this order block, lower high on price, higher high on yellow as well as on blue, by the way. But if we zoom out, then you can see we do have bullish CVDs building as well throughout the range over here, as shown here on my chart. These are the bullish CVD pivots. Higher low in price, lower low CVD locally, higher low in price, lower low CVD, which of course can be invalidated if the bearish CVDs here play out and price moves down, takes the lows. That's absolutely fine. Then we have also still here, higher low in price, lower low on the CVD. And if price would move down, potentially we create bullish CVDs with the pivots over here. So at the moment, there are no big bearish CVD divergences, but we do have local ones, which we should take into account. And it's no problem for the scenarios to move to the downside as mentioned. It's just that in this particular scenario, you expect price to move impulsively to the downside and in a bigger wave 3 where support should be broken. Of course, in the WXY scenario, if we're looking for the low of a wave A, as well as in this scenario where we're then looking for a wave X, we do want to see proof of support in case price would move towards the downside. We're of course not catching knives, we're not YOLOing and FOMOing, especially not during Christmas, of course. We want to see proof of support. And we do have some support in this range over here. Now, as you can see, I do have a new target box just below price, which is this blue box here, sitting between 42.6K and 42.9K, and if price would reach this area, I want to see proof of support as mentioned, whatever that is for you. Candlestick patterns, maybe RSI divergences, CVD divergences, market structure change, whatever it is that gives you the confidence for price to move towards the upside. We also have here value area low and the daily around 42K to 42.3K. And then we have a daily and a daily naked point of control around 41 to 41.3K. Above price, we have a fresh new daily here at 44K, which is the first area of resistance besides the point of control that we have here sitting at 43.8K. And then the value area high, but I think if price is going to the value area high once more, it already tested it so often, probabilities are very high to move to the upside, also because of the probabilities that the 886 would usually give us. These fibs over here are taken from the high to the low, and as you can see, the 886 has been tested once, twice, 3 times. Now after an 886 is touched, any move to the downside has a higher probability of being a wave C or a wave Y. But if price comes back to the 886, probabilities really increase for continuation. It rejected again, came back once more, increasing the probabilities for continuation, decreasing the probabilities for that bigger wave C towards the downside, which is this scenario over here, right? So if we then look at the probabilities of the different scenarios, then currently on the low time frame in this range over here, probabilities for me based on Elliott waves are highest for a flat scenario where B is still unfinished, where we are looking still for a move towards the upside, but eventually we are looking for a rejection to the downside and lower prices to come, where on the second place here we have the WXY, which also would suggest then taking the highs, right, probabilities, and then move to the downside in a wave C as well. And only then comes the most bearish scenario where we are looking for a wave 3 to the downside, 1, 2, 3, and then eventually a 4 and a 5, in then a bigger wave C where the support down here between 38.6 and 39K is very interesting. And the lowest probability at the moment for me is bullish continuation. I removed the double 1-2 scenario I showed in the previous video from my chart, where we were potentially looking for a 1-2 move up, but this range now is so incredibly long in time compared to this range. Really low probabilities. I do at least want to mention it, but bullish continuation at the moment does not have high probabilities. But as you just saw as well in the scenarios, going all the way up to 47K over here is no problem, right? Look at the blue box here, blue box sitting between 47.2, 47.5 is absolutely fine for still a bearish flat scenario, right? Now, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing. Enjoy your Christmas, enjoy your family time, and I will see you at the next one. Bye bye.